Now, I think we'll need to move on to our next session, ladies and gentlemen. And thank you very much for being here today, all of you. And this research study certainly gives us the overall landscape of climate tech investments in India and gives us a great context to dive deeper into our next session. What is more important is to think, how can we move the needle on climate tech investments in India? Let's hear it from the practitioners about their perspectives on the sector and how we can use some of the global learnings in the Indian context. We have a very distinguished and diverse set of stakeholders for this session today. We have 3 DFIs, USAID, CDC, and Sweat Fund, who have extensive experience of investing in climate solutions across the globe. We also have Aspen Network of Developmental Entrepreneurs, which is committed to propelling entrepreneurship in developing economies. To hear about the challenge of Indian entrepreneurs, we have Social Alpha, which operates through a nationwide network of technology and business incubation infrastructure. And to tie it all up, we have our moderator from Green Eartha, which is a climate venture fund established to make a low carbon economy possible. Let me quickly introduce the moderator of the session, Maya Chandrasekaran. Maya is the co-founder and managing partner Green Eartha. Prior to Green Eartha, as founding member of Mentera Venture Advisors and babajobs.com, she has done extensive work in the skilling and livelihoods verticals in India. So over to you, Maya, for this session.
Thanks, Ranjana. It's fantastic to be here. Very excited to be part of this discussion and to be able to chat and discuss with these various panelists. So when it comes to climate innovation in India, I think most of us here understand the challenges at a broad level. So I really wanted this discussion to focus more on opportunities, pathways, and success stories, and think about where do we go from here. And with that, it's my enormous pleasure to introduce our panelists. We have Anurag Mishra, who's a senior clean energy consultant at USAID, Gunilla Nielsen, head of energy and climate at Sweat Fund, Manoj Kumar, founder of Social Alpha, Richenda Van Leeuwen, executive director ANDI, and Rohit Anand, head of infrastructure South Asia at CDC. To get started, I thought it would be interesting to first understand from each of you what your role is, what your team does from a climate perspective, and then lead from there into more specific questions. Anurag, I'd love to start with you first. If you could give just a little bit of a background of the work that you and your team do at USAID.
Sure, thanks, Maya. So as part of USAID, we have programs on climate mitigation and adaptation. As part of USAID's broader climate change strategy, we work in the space of clean energy and sustainable landscapes on the mitigation side, and also on the side of water, agriculture, on the climate adaptation. And more recently, USAID has also partnered with the Coalitions for Disaster Resilience Infrastructure as part of the larger Government of India's initiative and a global one to support the disaster response, which is now getting more and more to the climate change. So as part of my role here, I'm the clean energy lead, and I work across the deployment of clean energy, both at the large scale, but also looking at small scale distributed energy solutions. Thank you.
Thanks, Anurag. Through your work, I'm sure you've come across a number of success stories. Would love to know, if there are any specific success stories that you can call out, and what has driven that success that specifically other innovators and startups can learn from.
Sure. So there are a number of success stories I can count on, but let me kind of start with one. I will not kind of name that organization, but just want to kind of give you the background. This is the organization with whom we met around 2011, and very innovative technology to serve the needs for the rural or semi-urban areas in terms of providing energy services through clean energy intervention. knowing that a lot of rural areas does not have access to electricity, but also a lot of them depend on kind of dirty fuels like diesel and other kind of a backup power. And they came to us for a discussion and wanted to do something on the ground, and we were also looking at supporting some of these interventions. And the ambition, we asked like, what do you want to do and how much support you need from USAID? The response to that is, okay, we need $100,000 to do something on the ground. We worked with them over the time, kind of engaged them, and we met them 6 months later. We asked them like, okay, tell us what do you need? They say like, oh, we need $300,000. And in a year's time, when we kind of engage again, they were able to do something on the ground. And when we asked like, okay, what do you need? This like, now we need $1 million. So it's like the ambition with which you enter into the in the sector, and you want to do something. I think this space provides you a lot of opportunity to expand your business interventions very fast. But on the other side, I think the reason that change happened with that enterprise was their ability to kind of match their solution to the ground needs. They were able to develop a solution which kind of addresses a major issue around financing those products, because that's one of the issue in addition to the technology, which has now become more and more robust. Second was they were kind of a reach on the ground, and they were able to establish that network. I think that was another learning, that as we are looking at more impact solutions, you need to be able to connect and work on the ground. And the third is that innovation through which they're able to kind of deploy these technologies and finance those technologies were kind of making that kind of a change, and they were able to kind of quickly scale up. And USAID provided grant support to them in addition to our engagement over the time through multiple rounds, with the intention that they are able to raise more commercial capital. And I'm happy that in like 10 years time, we're looking at a company which was able to exit the business, or able to make profit, but also scale up significantly at the national level. So there are a number of learnings we can draw from this experience. One is that for an investor to have a trust in the solution and the capability of your partner on the ground, but also understand that they may not have answers to the questions right from the day one. So you have to be a little more patient to work with them. And the third piece is to really see and provide support to things where it's kind of a new thing where they may not be able to raise commercial capital. So the right use of grant funds matching with the commercial capital would be really helpful. So I'll just stop here and happy to answer any questions further if you have. Thank you.
Thanks, Anurag. That was extremely helpful. I'll move to Gunilla. Gunilla, could you first obviously start by giving us a little bit more context on what Seed Fund does?
Yes, absolutely. So we are the Swedish State Development Finance Institution. What we do is that we make commercial investments in emerging markets, including India, with the basis of ensuring that the private sector is expanded. And basically, our mission is to ensure that there are more viable companies that then can create jobs and so forth. Energy and climate is one of our key sector focus areas. And what we do is that we invest both in on-grid generation and off-grid generation. We have invested in an Indian off-grid company that we are very proud of. And we also have a strong focus on various sorts of climate investments, similar to what Anurag was mentioning, but we invest at a later stage. So we invest in water management, forestry solutions, waste solutions, and so forth. But we are investing in companies that have then basically come through their very pre-VC stage and where there's a possibility to scale. And I think that's really the key thing. I mean, when we talk about how we can achieve our goals, it's really about finding those companies that can scale. And that's really the key thing, because I don't think anyone can deny that there's a huge need for climate tech investments, but the issue is really, how do you get these companies to scale?
And that's a great segue into my next question, which is, where do you see the opportunities for capital to be catalytic in this path from early stage to ready to scale?
Yeah, I mean, we see it very much, and it might sound like I'm somewhat simplistic here now, but I think that the key thing is that these are companies that are able to not only address a specific need, but it needs to be companies that can actually explain what it is that they're doing. I think oftentimes we come across quite a few small companies that have great ideas, but somehow they can't really explain how they're going to scale. and it's difficult to understand what their business proposition actually is. So I think that you need to find your business idea and then stick with it, and then just keep your eyes on the prize, which really is about scaling. It's the only thing that matters. How do you scale a company? How does it get from being at a VC stage to a company that can attract commercial capital and do several rounds of financings? That's really the key thing.
Right. And so essentially you're saying that where capital can be catalytic is to kind of sort of dig that out and sort of unpack that with the organizations that they're working with to enable them to get to that next stage.
Yes, and I absolutely, very much so. And I do think that also commercial capital can be quite helpful in terms of, not just incubating small companies, but also lead them down the path of how do you achieve a place where you can attract significant amounts of capital. And sometimes it comes down to having very difficult conversations with founders and early owners and so forth, to make sure that everyone is aligned, and basically make sure that these companies can be prepared to scale. I sound like a broken record now, but it really is all about scaling.
Yeah, absolutely.
And we see quite a big difference between some of these smaller companies and the ones that are able to attract capital. And oftentimes it's because the founders are still in the mindset that they don't want to relinquish control of their company. They're not willing to do X, Y, Z. And at some point, sometimes you do need to have difficult conversations at an early stage to make sure that everyone is aligned among the shareholder group, because that's really the only way to go forward.
Got it. So it's about really sort of designing for scale right from the beginning and having everyone aligned on that.
Yes, very much so. I mean, sometimes we come across ideas where you end up having quite complicated capital structures because it is very difficult as a founder. You always think that your company is worth 100, but the capital that comes in afterwards think that the valuation really is 50, and it's difficult to bridge that divide. And sometimes we come across ideas where you end up having a very complicated capital structure, and effectively you kick the can forward when it comes to this difficult valuation discussion. Yeah. And our experience is that oftentimes it is much more preferable to have those difficult discussions early on, because the problem is going to come up, and it's much better that it comes up when the company is 5 million and has 10 shareholders, when it's 50 million and it has many more shareholders. So just having those difficult discussions, because to some extent it's like a marriage. You need to sort these things out before you get married, and not just kind of kick the can down. It was probably an unfortunate allegory, but there you go.
Thanks, Camilla. Manoj, over to you. It would be great if you could start off by telling us about sort of all of the various things that Social Alpha does, and there's enormous breadth over there and depth.
Thank you, Maya, and thanks for inviting me. Privileged to be part of this amazing panel. Social Alpha is a not-for-profit platform that focuses on innovation, curation, and multi-stage venture development across climate, health, agriculture, livelihoods, and some of these areas where we have challenges of market not being really present in the same scale as it's present in most of the mainstream industries. So in climate particularly, we have been focusing on primarily 5 areas. How do we create a pipeline of new R&D projects which can be translated into solutions and then can be taken to the market, because it's relatively new for India, right? So we need to make sure that we have a visibility into various research programs and we can actually help these innovators build solutions and eventually startups. And on the top of it, we run incubators and accelerators which help these innovators build their companies. So for example, Government of India's Mission Innovation, we run the back-end incubator for that, focused on clean energy and climate tech technologies. And then we work with innovators and entrepreneurs with a blended finance model, because very early in their life they need non-dilutive grant capital, but at some point of time they are ready to pilot their solutions and go to market, and at that point of time we also provide them equity and have a co-investment network of investors who co-invest with us or bring in follow-on capital after us. And also, a lot of these startups, especially in the climate space, probably may not be able to go to market on their own. They probably will need partners like EPC contractors, O&M, or large corporations. If their clients are governments or large corporations, there is a likelihood that they may have to go in a joint go-to-market as piece of the larger solution rather than a standalone product. So that is where we also help them. So, we work with, large organizations like Tata Power. And if you remember, a couple of years back, Tata Power announced this 10,000 mini grid project that came out of our incubation. And on the other hand, we also work with organizations like Salco Foundation, who work with decentralized energy solutions in rural India. So that's the breadth of our energy work, for example. And then we're working in water resource management, agriculture, even the climate health nexus, and trying to create a pipeline. So at the end of it, we think that we can build an ecosystem in the country that creates pipeline for early stage investors and even multi-stage investors like SWEC Fund and others. So creating a pipeline of investable companies, de-risking them over a period of time is something that we do, in healthcare, in climate, and in other areas.
Thanks, Manoj. Obviously you've been working with innovators and entrepreneurs in this space for a really long time. And from all of these years of experience of working with them, what do you think is the primary business model challenge or change that they need to make to address what we're all talking about, which is scale?
So this is actually across the, all of the so-called social and environmental space, right? Whether it's healthcare or climate, it's the same problem everywhere. Most of the startups or innovators are very early in their journey, and building a single product and then taking it to market is a very large challenge, right? And especially when you are creating new markets or trying to fill a big gap in the market, right? So it's not like consumer space where you spend a lot of money in growth hacking and start building solution and market and start capturing market share on the top of millions of dollars of VC money that flows into the sectors like food delivery or logistics or e-commerce, right? This is an area where very little capital is available. Larger pools of capital come in only at a very later stage. So most of the startups, entrepreneurs do not actually really understand the power of being frugal early, using capital very efficiently, and depending upon partnerships, right? This is one area where having excellent partnerships and alliances helps companies really grow and grow faster. And in our portfolio, we have seen that some of the companies which have actually made progress are companies which have been open for partnerships and do not have, the fear of losing out or fear of, partners hijacking their business models. So it's very important to have an openness for working with others and willing to be part of the solution rather than trying to do it all on their own. It's a complex area, difficult space, and very early in the country. We don't have many success stories in this space, right? A lot of work that we today call for climate entrepreneurship is mostly around solar power plants and similar areas. But deep tech, science and technology driven climate innovations, we don't really have too many success stories. So we have to make sure that we can keep educating the entrepreneurs to be open for partnerships. That's one of the most critical problem that I have really seen that becomes a real, obstacle in scaling up.
Got it. And it's one that the entire ecosystem needs to come together.
Entire ecosystem.
Yeah. Thanks, Manoj. Richanda, moving on to you. If I may ask you to just set the context first by talking a little bit about Andy.
Yeah, thank you, Maya. It's a pleasure to join with you all. Andy, the Aspen Network for Development Entrepreneurs, is really focused on what Manoj was talking about, which is really looking at the whole ecosystem of support for entrepreneurs. So we work as a global network with the intermediaries whether it's the impact investors or the entrepreneurship support organizations, accelerators, and others that are helping to provide all those support services to entrepreneurs to enable them to be successful. And whether they scale rapidly, and I take a little bit of issue with scaling rapidly, because sometimes scaling successfully actually is more of a organic growth path. And I've personally been in that journey in India as a board member of Selco for 12 years and just stepped down recently from that board. And there were impact investors who actually looked at Selco and said, well, we're not going to invest in them because they're not scaling rapidly enough. Whereas we invested at the time in a pre-Andy life and said, okay, they're scaling sustainably and they've been profitable over the last 12 years. So I would say that also is we're really looking for impact, we're looking for long-term growth, we're looking for sustainability, both for the company, but also in terms of the impact. So for Andy, we work in India. We're currently focusing within climate on doing climate action labs and really looking together with bringing the sector together, convening, really looking at what the landscape is, where there are gaps in the ecosystem right now, where there needs to be additional support. So from some of our global work, we've run something called the Global Accelerator Learning Initiative over the last 5 years, and had a lot of interesting findings from there that were not specific to climate, but we can be bringing into the climate and the clean tech space. So first of all, there aren't a sufficient number of accelerators that are focusing on climate outside of OECD countries. So there are only about 25 accelerators globally outside of OECD countries. So first of all, there needs to be more investment also in the ecosystem of support, not only looking at the transaction with the entrepreneur, but who's out there, who's supporting them, what kind of programs they're running. Second is we see that the accelerators that do exist, many of them are quite more general and not necessarily focusing explicitly on climate or clean tech. And so they may not have the technical capability. So partnership is essential, working together with others that do have that. I mean, I'm a former renewable energy investor, and even being experts in the field, we still hired technical experts who were able to do a deep dive, whether it was on a specific type of wind turbine or other areas. So it's really looking at partnering to be able to make sure that you have that expertise, and then really looking at climate risk across your portfolio as well. So whether you're focusing specifically at clean tech or whether you're focusing and coming in from a different sector, but really looking at the use of clean tech. So for example, in climate smart agriculture, you may not be coming from the lens of we're setting up a new product specifically to focus on solar, but you're really focusing on that application, perhaps a solar for irrigation or some other application that is innovative in your context. So really looking at how are you assessing climate risk? Is your accelerator program, if you're running that, actually looking at that and really working with your entrepreneurs to look at both the climate risk and the climate opportunity, I would say, to really turn it positively. And then so tailoring your programs accordingly is key. And then I want to say one other thing as well, beyond the blended finance, because some of the other comments I think are absolutely appropriate in this sector. The need for tailored early stage blended finance to help carry the companies until they're ready for commercial capital. That is critical. It's something I've seen so many times as a former investor. The transaction costs are higher. You don't want to do those really early stage investments. So having some kind of catalytic capital, whether it's a grant-based or some kind of convertible debt instrument, or just having that blended finance capability really does help with supporting the entrepreneurs. My final point at this stage is another point that's really been coming up from our work on acceleration. And I note, having just taken a look at the report that's being launched today by the IIC, is that the typical climate tech company is male-led. We have found that in acceleration programs, women entrepreneurs actually come through acceleration further behind companies that are led by men, not because they're less capable, but there are still inbuilt biases in the system that mean that they don't come out as successful. So one thing I want to say is really look at your system, look at the barriers to women in the climate tech space, look at the opportunities. Are you actually reducing those barriers for women? And second, they have more access to debt, but equity remains more of a challenge as well. Now you can turn that around and say, well, perhaps the women entrepreneurs are just smarter and they recognize that they need less equity, and so they're making better use and more efficient use of their capital. Or you can say, and we don't know the answer to this one yet, or you can say that it's actually because they're still unable to access the equity because it's often controlled by men. So that's an area where we need to look at. But final point on this is at Andy, we're really looking at climate and gender equality hand in hand. And so we are helping, working with early catalyst funds to support intermediaries and to support women climate entrepreneurs. We've just run a RFP in sub-Saharan Africa where we had more than 500 responses. We're only able to offer very, very few grants, but we had, I would say, at least 300 of those 500 were actually viable. So I would be super interested to see if there's a RFP run in India with a catalyst fund specifically for women climate entrepreneurs. Can be climate tech, can be slightly broader. What the kind of response would be, because I think it would actually be much larger than perhaps we envision it would be. Thank you.
Thanks, Richenda. That's a really great kind of context setting and background. I have one follow-up question, and you alluded to this a little bit, where you said that the space needs, this is kind of building on what Manoj also said, the ecosystem needs to come together and the space needs more enablers, such as accelerators. In addition to just having more accelerators, are there specific things that accelerators should be doing more of or better to really support early stage climate innovation?
Yeah, I think, as I say, I mean, on the gender side, I've already touched on that well. I think also just looking at the programs that they're operating, they need to be tailored. There is no one size fits all for successful acceleration. So I think there, accelerators are also very, like VCs, funneling many companies and only picking a few. So I think given the challenges that we have for climate and, looking forward to the COP coming up in Glasgow later this year, net zero by 2050, it's massive goals that we have. I think we also, because it's less about the acceleration program, it's the fact that we need more support. We really do need to be expanding the whole pipeline, helping to support more companies, because we don't have the solutions yet, particularly beyond 2030. We can deploy till then, but we do need these new technologies, new approaches, new solutions. So we really just need to expand the pipeline further. And for that, we do need more funding for the ecosystem writ large. Second thing is, I would also say, is look beyond the capital cities. I've worked in parts of India. I've hosted conferences in Patna and Bihar that in the past around energy and energy access, particularly decentralized renewable energy solutions. And at that time, I was told it was quite innovative to do that. So I think all of us also need to look beyond our comfort zones and look at the market as a whole, rather than really focusing on perhaps parts of the country where it's easier, or countries where it's easier to operate, but really look holistically at the impact that you can be having across your market.
Thank you so much, Richenda. Rohit, again, like everyone else, it would be great if you could start by setting context in terms of what you and your team do.
Sure. Thank you, Maya, and hello, everyone. So CDC is the UK's DFI and operates in Africa and parts of South Asia. So we invest capital through three routes. We invest into GPs who are pooling capital along with others and then investing directly. We invest in share capital, so equity in private companies, and then we also lend money to companies. So climate is about a third of what CDC does, and India is the largest market for CDC overall. So we have an investment portfolio of almost $2 billion in India, and about a quarter of that is in climate related and infrastructure related stuff. Directly, what we focus on, and my colleagues as well, along with me, is mostly we invest in sort of large scale utility projects, as with I think most people who are investing in the climate market today. But in the recent past, we've started investing in distributed energy, and we've started to look quite seriously at this sort of climate tech space, and we can talk about what's interesting there. So this is really our focus area. I mean, we have companies, as I said, largely on the energy generation side, and through them, we often come across solution providers who we would probably put in the climate tech bucket. But then separately now we are approaching it more as a theme and trying to really figure out whether we can invest and what are the ways in which we can invest in this space.
Great. Yeah. So I would love to learn a little bit more about, as you said, this new theme that you're looking at and how you are seeing the movement from, as you said, large infra projects to some of these earlier stage climate tech companies, and how you are essentially seeing your role in creating that pathway for them to grow.
Sure. So look, I think the first step for us was to really figure out what is this space, because it is a very kind of hazy term, this climate tech. So what are we really talking about, and how much of this space is already business as usual kind of investing, and how much is really new things. That is what we were initially focusing on. And so I think there are three main buckets that we think are interesting and where we are spending time. So these are businesses either related to supply of electricity, and what we are finding is that there is a lot of capital going into building projects. There is a lot of competition, and returns are lower than what they used to be. So there is a huge push on making assets more efficient, or in building those at a lower cost, I think. And any company which is using technology to solve either of these two problems is one which is worth looking at. The other big space is mobility, and there is a lot of innovation happening there, both in terms of sort of personal mobility as well as on the commercial side. And India, I think, seeing very good traction there, purely because the e-commerce market is there as a big customer base, which is looking for efficient solutions. So that's the second area where we think it's possibly time now for making investments. And the third one is relating to agri and land usage. And it could be a variety of businesses, from data analytics to improving yields on existing land, or it could be to do with sort of mapping or analyzing agricultural patterns. So these are three areas where we think there are interesting sort of opportunities to invest. It's all a lot of it is very hard to invest in today, because unlike many other sectors in India, there is not that much precedence in this space of scaling up. So, if you look at a company which is, let's say, operating on the e-commerce side or on the technology side, which is more conventional technology, you can see a lot of historical paths where people have started and how they've scaled up. There is not a lot like this in these areas. So that makes it very challenging when you're trying to buy into an investment thesis. So the way we are thinking about it is that I think it will be a mix of allocating capital to some funds who are focusing on this theme, and it's really on the early stage side of things, because there is a clear dearth of money. And I think that if people are able to scale up, there will be a lot of capital. I think beyond a certain point, there's a lot of capital interested in this theme, but below, let's say, 10 million, there's very little. So it's a bit of a chicken and egg, that everybody wants the sort of large, successful climate-related business, but nobody's willing to fund the early stage stuff because it's so hard to scale. So that will be our role, I think, in trying to help set up some GPs like that who focus on that market. And then, of course, directly we are continuing to look both, as direct investments as well as through our portfolio companies. So I think next 1 year is probably where I think we will start making some moves in this space. But as I say that it's very rare that you come across a scaled business in what we are calling as climate innovation.
Absolutely.
I mean, especially in India, where it's more coming around as a services sort of industry rather than a R&D or materials research, that sort of industry, because that industry is not there in the same way in India.
Thanks so much, Rohit. And I think that's Rohit touched upon a very important point, which is this chicken and egg situation, where we have a lot of early stage innovation and some support, and then later stage funding, and then this gap in the middle. And I think Rohit has suggested one way to address that, which is, supporting GPs who are specifically addressing this gap. Others on this panel have talked about blended finance. I just want to throw this question open to all the panelists and see if there are other things that you believe capital can do to essentially bridge this gap, which is, a big challenge for innovators at this point and is really kind of that missing middle.
Yeah, I'll kick off with a general comment, which is applicable beyond India as well. I think specific to the impact investment sector, which is that we still do not have universally accepted, robust climate metrics that are comparable across portfolios in a way that that we can use to really evaluate the success of the investment, such that I've had, even since I joined Andy in the last year, quite a number of heads of impact funds come and say, it's very difficult. We don't really know how to evaluate this kind of investment versus this one. And that's also, therefore, I think, preventing or at least limiting the amount of capital that's coming into the sector, because we don't yet have those tools. In the impact and investing sector, we've developed impact tools over the years, but we haven't really looked at them from a climate standpoint. So I think that there's work to be done systemically as we're looking at ESG in the public sector markets, but particularly for smaller businesses. We don't yet have that kind of that overarching set of metrics. I mean, beyond looking at, CO2 mitigation is not necessarily the best metric in this sector. So that's an area I think systemically we need to do more work on, including within India, but globally.
Thanks, Chinda. Manoj, were you going to say something?
No, just to build upon what Rohit mentioned, right, that if we really want to look at new innovations and science and technology based product early, right, where you're actually introducing new materials, for example, or new technologies in not just in generation but also in storage and distribution and consumption side of energy, or in regenerative or climate resilient agriculture, or in water resources, or in disaster planning, land use. See, a lot of capital is required there, and the problem with impact investing is it's not impact first, right? So what happens, the way impact investment thesis is designed, it's actually designed based on the mainstream venture capital models, and in a market which is still evolving and not yet proven, those models don't work. So the way you expect returns on a microfinance investment or in a payment company or in a food delivery logistics business, if you apply the same thesis in climate innovation, it's just not going to work. So you need GPs very early with impact first approach till mainstream capital gets excited about this market, right? At some point of time, at some point of time, mainstream capital is going to be excited about it, but it might be too late for the entrepreneur who is managing it with whatever capital is available. So what happens when you have whatever capital is available model, then you start making compromises and whether it's R&D or market readiness or product market fit. So this is actually the challenge that we face on a daily basis, because we work with these startups in this valley of death, right? The whole lab to market piece. And the only way we have been able to actually do some work here is through government funding and philanthropic funding. So private capital markets as of today are not yet really interested. But I think we are getting into a phase in India where I can see some interest in this space building up. And this interest is starting with D2C, is ESG kind of easy, low-hanging fruits. But I think in a year or two, we will see more appetite for products in this space.
Thanks, Manoj. I'm actually going to throw this back to Rohit and just ask if you have any reflections on what Manoj is suggesting, which is a different model, in fact, for funding for these early stage and sort of growth stage companies. Is that something that you thought about as you think about supporting GPs and being catalytic to this entire ecosystem?
I'm not sure in what way it would be different, but probably short answer is no. We have not considered, a different way of, providing capital. But as I say that, I think we are only now starting to think about backing some GPs in this space. I'm not sure how far away from the traditional model you can go because, you have to make the math work for the investors, for the GP, and I think I'm not so sure, what we would change to solve the problem Manoj is saying. Manoj, what is in your mind in terms of how would you do it differently?
We are still experimenting with this whole thing, but I think as of today, I think that till commercial capital gets excited about this space, we need to deploy philanthropic and public capital, and government and philanthropy need to take climate as a priority, right? And while if you see current global philanthropic funding, including India, it's more towards conservation, which is great, and we need to spend more money on conservation and environmental NGOs. But at the same time, we need to divert some of the philanthropic and government capital to innovation curation, right?
Sure.
That is just started. Yeah.
Right. I think first, in any case, I think what you'll find is that as far as the private market is concerned, all the DFIs are definitely going to lean in quite heavily into this space. My guess is that, it's part of the process. There will be more direct capital available. There will be more kind of pooled vehicles getting created. And, I think that's part of the solution. And probably part of the solution is the grant capital as well. But that's, at least I'm not a specialist in that, so I sort of struggle to comment on that.
You see, you are creating a new sector. Like I remember when microfinance started, for several years it used to be run by grant funding and NGOs used to run microfinance before Muhammad Yunus got the Nobel Prize and everybody found the, ROA in microfinance. Today, microfinance is more mainstream than commercial banking in India, right? So I think it's like you are building a new sector and at some point of time, it will become very exciting. It's worth doing.
Yeah, if I can just very briefly comment on having been one of the early investors and impact investors working particularly on the distributed renewable energy side, that is what we've seen. I mean, particularly some of the successful off-grid companies, mini-grid companies, all of them without exception did have some kind of grant capital that helped support them, whether it was winning a business plan competition or some other kind of curated capital over the last 12, 14, 15 years to help support them. So off-grid is no longer a new sector, but I can say even the ones that like to say that they've gone through, several commercial funding rounds and raised $100 million in debt, I know all of them, and all of them did have some kind of catalytic grant support early on. So Manoj, I completely agree with you. And one of the challenges, of course, is the need for that philanthropic capital to be more coming up in India itself from Indian philanthropic sources. So the report that IIC is just launching, shows in it the philanthropic sources of capital. Many of them are international, and that's become more challenging to get international philanthropic capital into non-FCRA approved entities in India, so within the ecosystem. So it really has to be Indian philanthropy that steps up and helps to meet that gap as well.
Anurag, I think you were also going to add something on this.
Sure. So I think adding on to the conversation about what role catalytic capital can play or what addition we can do to this, I think some of the things which we have learned for this sector, the challenge comes from because the solutions are innovative, which means each solution is different. It's kind of designed to meet a specific context. So these are not a kind of a very standard solutions and very difficult for a investor to understand. So I think that's the challenge which we need to kind of understand. And in that context, the two things which we found to be helpful. One is kind of providing some kind of a business incubation support so that the companies are able to communicate to the investors in the way what investors would like to understand, and the same way trying to communicate back to the companies, and then need somebody in between to really help that conversation to happen. And through our programs in the past, we were able to kind of provide a lot of support to the entities. Most of them were early stage to really come to a point where they were able to really raise the capital and be able to approach the right investor for their solution, what they're looking for. The second thing which we also found helpful is our programs on credit guarantees. This helps investors to get some level of confidence, and also because they're coming from an entity like USAID, which has certain level of kind of acceptance, also brings them more confidence. And what we found is in most of the cases, the hesitation from the investor side is because they're not sure about the businesses they're investing into. It's not that the business is risky, but just because they have not really invested in this before, they kind of hesitate. And we found that once they're used to doing one or two investments, they were able to do that without even having a guarantee in place. So I think those are the ways through which some of the kind of a grant funds or kind of a fund support from BFIs can run. And the last piece to bring up is the support which is needed for the overall ecosystem, wherein there are certain things which are very specific to a business which the incubation can support, but there are certain things which are more global. So any policy which has an impact on a specific technology or a solution, and that is where the capability of an individual company is quite limited, and that's where USAID has worked with a number of partners in India to establish the Clean Energy Access Network, which has now kind of working for the sector, bringing the common voice. And I think these are the ways through which we can enable these investments to go. Over. Thank you.
Thanks so much, Anurag. And, picking up from that, you talked, just now about networks. And again, the host of this panel is IIC. My final question before we open it up for Q&A is one that is really close to my heart from a Green Artha perspective, which is on collaboration and collaboration between capital providers. Again, this one I'm going to open up to all of the panelists. One of the things that we obviously are looking at when we talk about blended finance, when we talk about guarantees, is a couple of different capital providers coming together and looking at a similar outcome. What do you think are the best ways to enable different capital providers, sometimes with slightly diverse mandates, to be able to work together and align?
I can start with a comment on we tried very recently and was successful, although it took a really long time to bring a number of partners together, where we had a kind of a foundation from the US working with a real kind of a big investor from the US, and some of the Indian financial institutions, the non-banking financial institutions, to establish a new credit guarantee for the small medium enterprise sector to deploy more clean energy solutions. And again, it is the question of the different entities have their own timelines and the decision making processes, which makes it very complex, because somebody want to close a round in a financial year, whereas organization like USAID, its own financial year may not match with their financial year, or our resources, the process of kind of committing our resources take longer than what the private sector could make decision on. So I will not say that it is impossible, but someone has to really understand the way different investors work and be able to kind of work out a model through which they can flow together. Because I think that would be the ideal thing, where a grant from USAID or a foundation and a commercial capital from NBFCs and US investors can really work together and create a much bigger impact we can look at. But I think that is where we need to have a more collaborative work, and I don't think we are all kind of geared to do that at this stage. We need somebody else to help us kind of.
I want to facilitate that collaboration. Gunilla, you had something that you wanted to say.
Yeah, no, I want to tag on to what Anurag was saying. I mean, we've invested in a number of these blended finance facilities. And I think one of the other keys to success is that all the investors, irrespective of their risk appetite, need to have the same sense of what kind of company or what kind of vehicle this is. I think oftentimes, and it sort of comes back to what we're talking about in climate tech, and something that we have been discussing for quite some time now, is that oftentimes investors that are looking at climate tech tends to sometimes really want to invest in tech investments. That's really their driving force. And then they have it at the back of their minds that this is going to be primarily a tech investment. But I guess if one is being facetious, anything can be technology. But some of these companies are more on the climate side, and the tech side isn't really that strong. So I think one learning really is to make sure that companies that are trying to raise funds, it's really important to understand who are the likely investors and how can they present themselves in a true way to these investors. Because you end up wasting a lot of time if you're trying to present yourself as a very techy company, when in reality, it's not a very technologically complicated solution that you're offering. And I think that comes back to what Anurag was saying, these blended finance structures, if somebody has a sense that there's a lot of risk that needs to be mitigated, and another set of investors think that the risk is completely different, that's when there's a bit of a mishmash.
Maya, can I add something to what Anurag and Gunilla said? See, one side of innovation and entrepreneurship that we actually don't really talk in most of these discussions, that it is not always the financial investment that entrepreneurs should be looking at. Because if you look at some of the use cases like industrial decarbonization, it is unlikely that you will have financial investors coming in. For example, if you are doing something in steel, cement, and power and construction industries, right? These areas have very large incumbents, and as an entrepreneur, you will have to work with them. So one of the very important collaboration point that you mentioned, Maya, in your question, that industrial collaboration is extremely important, especially today. See, the understanding of low carbon future and green premiums is very low today in the entire industry and also in the investment space. And it's really important for innovators to get in collaboration with cement, steel, construction, and some of these industries which have to do something about their carbon footprint, right? So it's and you probably need to do it without any impact investor or any mainstream investor, because financial investors probably may not be interested in these business models which are directly in the supply chains or value chains of these large industries. So that's we're talking about 25 to 30% of emission, right? And climate tech is not only about solar and wind; it is beyond that.
Can I add a final comment on this one as well, which is really get to know the sector. I think Gunilla and others were making very appropriate comments. I've seen so many investors come in new, who are, as Gunilla said, maybe from the tech sector, with outsized expectations about the right return profile for a particular sector on clean tech. So it's also, that there are a lot of these. Yes, it is a newer sector and it's not a new sector at the same time. So, there is a lot of history. There's a lot of learning out there. There's a lot of understanding about what are the kind of profiles. So, in emerging markets, we're always expecting these very outsized returns, which may or may not be right for that particular sector. So I would say, check your hubris at the door as an investor, and then, actually talk to those who've been in the sector for a while, learn what the expectations are, and so come in, because you'll be a lot more successful whether you're looking at blended finance or actually working with the entrepreneurs, because often the entrepreneurs will be talking up because they think you're coming in with a certain level of expectation, and then you have to really right size it. So I've seen some sectors be burned, particularly in the off-grid renewable sector, where newer investors were coming in with just unreal expectations, as we had seen at times with the microfinance sector as well, preceding that. Last point on my side, we haven't talked about, coming back to the acceleration for a second, is accelerators also need grant funding to survive. We in our accelerator learning initiative, we looked at over 100 accelerators globally, and not one of them, whether it was in the US or anywhere else, not one of them was able to survive commercially. So all of them needed some kind of subsidy. So just to put that plea back in there as well, if we're looking at the support services for the entrepreneurs through things like acceleration services, they really cannot stand on their own. They do need that extra support as well to help them provide effective services.
Thank you all. That was, I think, very helpful and quite comprehensive. Just in the interest of time, I'm going to start moving to some questions that have come in from the panelists, from the participants. The first question is about the US ecosystem for climate tech being more advanced than the one in India. And what can Indian entrepreneurs and investors learn from their American peers? Who would like to address this first? Vichenda, Rohit, would either of you like to comment on this?
I mean, I'm more of an expert in international clean tech than I am in domestic US clean tech, even despite living in the Washington, DC area for many years. I mean, I will say you need the enabling policy support as well. So I think clear signals from government, which we sometimes have in the US and sometimes don't have, I think are very helpful. I think one of the things that we've also seen where we've had both forward-looking and not forward-looking is on the utility side as well. It's really it's if we're looking at particularly in the power sector, looking at the regulations for the utilities, what do they allow? We've just been through a horrendous hurricane in the US recently, and the utility was without power for many days, and there's a lot of talk about, well, what about clean energy microgrids and being able to incorporate those into the utility? You have to look at the regulatory structure. You're having to look at to what extent are those utilities encouraging and incorporating innovation, whether it's renewable energy or how they are looking at the utility 2.0, what's forward looking for them. So that's an area where I'd say we have some great successes. If you look at what's been going on in Hawaii, for example, in terms of incorporation of clean tech, renewable energy solutions, particularly, I would say the US has, and again, I'm being very, very broad based here in my comments, but we have been focusing also on a bit more on local manufacturing production. We have some challenges right now in the solar sector with some of the international manufacturing, and we have First Solar, for example. It's a domestically focused company. So I think also looking at are you outsourcing your manufacturing beyond India? What are you actually manufacturing in India in terms of solutions as well? What is the market? What is the break even? What is the opportunity? What do you want to do from a national energy security standpoint as well? These are some of the questions that certainly somewhere within the ecosystem need to be considered.
Yeah, it's also about availability of capital and risk appetite, and it's not just in climate. Even in healthcare, we have seen more capital with high risk capital available in the US. So maturity of private capital markets, risk pools. How many Indian companies, even in mainstream business, have flipped to US for raising their Series B and beyond? So this is not. I would not say that this is unique to climate space. This is actually an entire spectrum of risk capital. US definitely has larger capital pools with higher risk appetite.
So then I think your response there, Manoj, is what Indian investors should be learning from American investors.
Exactly. And we are doing that, Maya, by educating them. So we have to keep doing that.
Great. Anyone else wants to comment on this? So I'll move to the next question. The IIC report refers to the need for patient capital. Can DFIs really provide a large pool of such patient capital at this early stage? Maybe Anurag, if you could go first.
So I think there definitely DFIs can provide that. US Development Finance Corporation has recently come out with a separate kind of a scheme for provide funding for climate friendly technologies. Although when it comes to the transaction size, that also becomes a bit of a challenge because the needs could vary from a very small investment need to a very large one, and somewhere we have to the investors, at least DFIs, should be clear to the investors in terms of what is the range of ticket size they can invest into and kind of serve that need. In terms of scaling up, we have seen that as with most of the businesses, a combination of capital from DFIs are followed with the large commercial investments could really help that kind of a scale up happens. So DFIs can provide that, but they may not have enough capital to serve the need, which the report really point to billions of dollars of investment required. I think that is where the commercial capital will play a very important role.
And yeah, to come back to my favorite topic, I think that's also where the collaboration of various funders and types of capital plays a role. The last question over here is, how can we accelerate the tier 2, tier 3 entrepreneurs working in climate tech? Manoj, I might ask you to respond to this first.
See, what we have seen in India, that entrepreneurs are actually coming from, all parts of the country, right? We have startups in smaller cities which we have not only incubated but also invested in, and the only way to support them is not give too much weightage to their degrees and colleges, English speaking skills and PowerPoint skills, and look at their ability to create solution and impact. A lot of time, I have personally noticed this, that, we start evaluating people on the packaging rather than the content, and it happens in early stage. So even before the idea, see, sophisticated investors at later stages have the expertise to evaluate, but if the startup dies even before reaching there, right? So it's very important for early stage curators to not give too much weightage to the pedigrees and PowerPoint and language skills, but look at the actual ability to create a solution and take it to market. And those biases exist in India. Like Jacinda was mentioning about gender, background is also a similar discriminator.
Jacinda, any last closing thoughts on that specific point? Because you called this out as well in what you thought accelerators and enablers should be looking at, or should be looking beyond the top cities. Any things that you have seen people do well, or again, they should be doing better to facilitate tier 2, tier 3 city entrepreneurs?
Yeah, thanks, Maya. I mean, I think Manoj put it really well, which is be intentional. Be intentional about going beyond the English speaking entrepreneurs. Looking at other parts of the country. I mean, I've had a long time personal affiliation with Selco and Selco Foundation, and they've been doing a lot of work in the northeast of the country, for example, and supporting renewable energy entrepreneurs in the northeast of the country, which, if you're probably sitting in Mumbai, I would not imagine is necessarily where you would first think of in terms of providing your support. So absolutely, you know, I could not agree more with what Manoj said about really being intentional and looking beyond the degrees and the language or the particular background. And that's global. That's not just for India.
Thank you. Any last thoughts before I hand over to Ranjana? I think we're now over time. Great. Thank you, everyone. That was a really fascinating discussion, and I think many key points that have emerged over here, which hopefully will be useful to investors, accelerators, entrepreneurs, and obviously all of the people who are looking to kind of build the ecosystem at a broader level. That seems to be a very large role, especially as we think about blended finance and who's going to facilitate that. Who are the people who are kind of sitting at this node, connecting the various dots and connecting the various organizations. So hoping that these conversations like these lead to more collaboration, and I'll hand over now to Ranjana.
Thank you, Maya, for your brilliant moderation, and thank you all panelists for throwing light on various ways early stage climate tech startups can scale and grow, be it via timely assessment of the capital-oriented challenges, preferably in the initial stages, or by providing ample blended finance support, building partnerships across the ecosystem, and ensuring the companies receive appropriate guidance from accelerators and incubators. So thanks a lot, everyone, for this brilliant panel.